Welcome, everyone. I am Kerry Good, and today I'll be sharing a disruptive innovation playbook exploring how generative AI is reshaping financial services and what your institution can do to not only survive but thrive in this new landscape. Let's begin with disruptive innovation. This is when smaller companies target overlooked segments of the market, offering simpler, cheaper solutions that eventually overtake established players. A classic example outside of finance is the downfall of Blockbuster versus the rise of Netflix. Blockbuster dominated video rentals with physical stores, but failed to recognize the disruptive potential of streaming. Netflix started by mailing DVDs to a niche market, then pivoted to streaming, ultimately transforming how we consume entertainment and forcing Blockbuster into bankruptcy. In financial services, we see similar patterns. Peer to peer lenders like Lending Club bypass banks to serve borrowers who were previously rejected, slashing costs by 30%. And then you have robo advisors like Betterment, who democratize wealth management, offering low fee portfolios to everyday investors. Here's how disruptive and sustaining innovation differ. Sustaining innovation focuses on incremental improvements for existing customers. Think of JP Morgan and Chase enhancing fraud detection for its current clients. Disruptive innovation, on the other hand, targets underserved markets with good enough solutions. Neobanks like Revolut are a great example, offering fee free international transfers and capturing customers the big banks overlooked. Clayton Christensen's Innovator's Dilemma explains why incumbents often fall behind. They focus on short term profits and ignore emerging technologies. In banking, many institutions resisted blockchain powered transactions, while platforms like Ripple and Ethereum redefined cross border payments. As a result, fintechs now handle 15% of these transactions, a clear sign of disruption in action. Now let's talk about generative AI and its transformative power. AI is not just automating tasks, it's rewriting the rules of finance. It enables hyper personalized services like AI driven financial advice and real time fraud detection, reducing losses by over 30%. In fact, up to half of financial tasks can be automated in the near future. How does AI powered fraud detection work? Generative AI analyzes over 10,000 transactions per second, spotting anomalies and reducing false positives by 60%. For example, MasterCard's AI system now prevents 20 billion in fraud annually. Unlike traditional rule-based systems, generative AI learns normal spending patterns and flags deviations like sudden luxury purchase on a typical frugal account. At JP Morgan and Chase, these systems have reduced fraud losses by 40%. Generative AI is transforming customer service from basic efficiency to truly exceptional, personalized experiences. Today's AI powered systems can understand complex questions, respond instantly in multiple languages, and even detect customer emotions to tailor their replies with empathy. For example, banks and financial institutions are using generative AI chatbots and virtual assistants to handle customer inquiries 24/7. These systems provide instant, personalized responses about account balances, transactions, and financial advice, which improves customer satisfaction and it reduces the workload on human agents. For example, Morgan Stanley has deployed AI powered chatbots to enhance customer engagement and support. Generative AI models analyze vast data sets, including unconventional sources like utility payments and social media activity, to create more accurate and adaptive credit scoring models. BenScore Global, for example, implemented a generative AI system that led to a 25% reduction in default rates and a 40% increase in credit issuance to previously underserved segments. These systems also automate the creation of credit memos and executive summaries, speeding up loan approvals. Generative AI also continuously learns from every interaction, improving its responses over time and ensuring customer always receives relevant, accurate, and context-aware support. This level of personalization and responsiveness not only boosts satisfaction and loyalty, but also sets a new standard for what customers expect from service interactions in every industry. So, how should financial institutions respond? First, build AI partnerships. Collaborate with fintechs like Stripe or Plaid to integrate generative AI for credit scoring and chatbots. Second, upskill your workforce. Train employees to interpret AI insights, such as using AI driven risk models. Third, implement ethical AI frameworks, address bias in lending algorithms, and ensure transparent use of customer data. Of course, there are challenges. Key concerns include bias in AI driven lending, such as racial disparities in credit approvals, and ensuring GDPR compliance in generative AI outputs. The solution is to adopt explainable AI frameworks, which make AI decisions transparent and audible, helping to build trust and meet regulatory requirements. As you can see from the image, which is a world map highlighting the current landscape of artificial intelligence regulation across different countries as of late 2023. The map uses color coding to show which countries have AI specific laws already in force, which are working on draft legislation, which have only policy guidance and no national proposals at all. For example, the European Union is leading with the comprehensive EU AI Act, which is expected to set strict requirements for high risk AI systems and ban certain practices like manipulative or exploitative AI. Countries like Belgium, France, South Korea, and the UK have already passed multiple AI related laws, making them leaders in this space. In contrast, many countries are still in the early stages, either drafting laws or relying on policy frameworks rather than enforceable regulations. Meanwhile, some regions haven't yet to propose any national AI regulation. This uneven regulatory landscape means that the rules for developing and deploying AI vary greatly depending on where you are. For global businesses and innovators, this creates both challenges and opportunities as they navigate compliance, risk, and ethical considerations in different markets. To wrap up, the message is clear: lead the disruption, don't become its casualty. Looking ahead, generative AI will trigger similar waves of innovation in other industries. For example, in retail, Instacart's AI suggests recipes and auto-fills grocery carts, boosting sales by 25%. Generative AI will enable hyper-personalized shopping, reduce inventory waste, and revolutionize supply chains. The future belongs to those who embrace it. Thank you.